Good morning, MMTs. Time is right now 5:21 a.m. Pacific Standard Time. Most important thing about it is 7:25, 2012. And we're gathered here today to talk about gaps and how to, when ISRG, when we shorted it up at the highs a couple of days ago and it went torching down here to 472, when you get pre-market volatility futures gap, when you learn how to buy these gaps, we have a special section on high frequency trading. You need to learn more about that subject. However, putting the market when something sells down really hard, there are limit orders that you can use to have both sides of the volatility. So when we shorted it up at the highs on ISRG, as we did, and we want to let you know that when they hit the bottom end, they will have artificial price gaps, meaning that you have 599 shares. Was that enough to move the stock in that price? Hello, knock, knock. Ask is it 482? Bid is 478. How do I put this in my favor? It's simple. You got to know when, where, and why on an earnings play on a short side is that you do buy the bottom ends down here because your short has already paid you so much money that it affords you, well, capital risk wise, to take the lower bottom entries without being under pressure and putting the markets in your favor with high frequency, artificial pre-market stock future gaps. All of these are very, very important subjects that you need to learn because the systems have changed and people have not changed. So the systems within the exchange model has changed significantly in a high frequency trading model, which is called buy and sell scripts, behavioral buy and sell scripts within the Wall Street tape. That means all of them put together except for who? The market maker still has to do his job. They're not regulated. However, it's how you take the artificial price gap and then you sell it and ring the cash register. Once you short a stock like ISRG, and we called that short right up at the top, that at the bottoms you can start buying them. So that's a gap up today. Another one that got really, really hammered was CMG. Okay. And I'm just going to, Netflix was our short yesterday. And then you're going to learn that Netflix, when it goes up to resistance levels and volatility, the $75 put option will come into play at that time here on Netflix as far as the option go. TripAdvisor. There is a short on TripAdvisor. Closes at 43.47. Now, it will bounce off of that lower bottom area. So if you have a call, a put option, a $30 put option to go down in value, when that thing comes down toward $30, you're going to want to have that $30 call in there so that you can steal that premium, make that transaction. Then if they want to do their mechanical buy and sell scripts to higher price resistance levels, you would sell into that. Oh, yes, you would. So let us not forget that price volatility, such as this big pre-market gap down, and how do I buy Apple? Well, we already talked about how I'm going to buy Apple. Here is a 565 call deep in the money that expired on 7/27. That's this week. That's this Friday. Today is 7/25, 5:25 a.m. And it's pre-market pricing. It's gap ratios, it's stock futures, it's everything that you need to know that's done in a mechanical buy and sell script that you're not aware of and that you need to learn so that you can beat them at their own game. Pre-market futures, we're going to be buying that 565 call. I can tell you, this is live, it's here, it's now. It's 5:26. Market's going to open up at 6:30, so let's see how good we are. We're going to be taking a look at how to buy the 565 call for an entry and an exit at a wholesale price and then selling back to the public. As far as Apple goes on the other end of its volatility, one of the main things that we're going to be looking at would be where is that wall of resistance going to be, because Apple has changed. The trade management changes as of 5:26 a.m. Pacific Standard Time, 7/25/2012. That means right now. And I didn't stutter. And it will have a new set of ranges. It will have a new set of sentiment. And how do people really feel about the company now? Because we are in a worldwide slowing growth period, as we had forecasted well over 9 months ago. And we have all the live videos on YouTube to prove it. Before the fact, before any of this is happening, we already said this is what the mechanical structures. We have a big pre-market gap up today. On Caterpillar earnings, you got Boeing earnings. Both beat, but just let us not forget that Caterpillar and the analyst community got really bearish on it, and that's when we started liking it. Because everything is going to have a range, and everything in a very short period of time, whether it's 1 hour or 1 day or 5 days or 3 days, it doesn't matter. They're all going to have a cap at a certain price range. Whether they're done with high-frequency trading programs, those are human beings who program to buy and sell scripts. And I don't have a lot, and it's called HFT, and that's something that you must learn. You have no way around it. Because, as I say today, 575 put option on Apple will come into play. As far as letting that upper end of resistance prove itself right around that price range, if he overshoots it by $2.50, then we can even steal him at a lower price. More wholesale. So we do have a lot going on in pre-market, but this is our pre-market. SMF, market maker, school and actual live market makers making transactions here. So it's all about how to trade the opening price bill. That means that the pre-market futures have a way of squaring positions, and there are certain types of things. So when futures gap up, prices artificially, S&P is up 8.4 handles right now when they were negative, and you got a Dow Jones up 122, and you have two major Dow components right now leading the way, Caterpillar and Boeing. We're going to take a look here at the 560 calls going forward, as the upper end of that resistance level is in the high frequency buy and sell script. It goes whoop, right up to resistance and then reverses and makes lower lows all day until it finally hits that lower end. So once again, the 565 call is very exciting right here. We would also like to feature within the greatest price volatility ranges, Priceline.com. Why? Because this one pays every day. It sells at those resistance levels, and it does make the lower lows, and we are also a big short seller on it for the longer haul. And what does that mean? That's a long haul short. That's what it means, because if you're right on the fundamentals, as we were in this quarter with just about all of them across the board, on a percent level, I would say we're at least 95%. And then there's about 5% over there of manipulation that no one's ever going to get around. I don't care who you are. But I will feature why the longer haul. If you know that you're right about the fundamentals, and this is a big, huge gap down right here, right now, and how do I pair those events. Well, you take TripAdvisor, that's 43.47. That there are some shorts on here that we have live here now. The $30 call on the lower end is where it would bounce. So you get the $30 call, so that way, if the puts start losing profit value, well, you're making some coin on the other end. The price line trade is going to be tradable up until the day it reports its earnings. And it will have a range, and it will still bounce off support levels, though, today. So you'll be looking at the 645 calls when they come down there. Yeah, you would. And you would be looking at the 650, and if it undercuts it by $2.50, it makes the 650 even cheaper at that wholesale entry, but you will ring that cash register. This is here, and it's live, and it's now, and it's being pointed out. And it's all about where that price lands on the left elbow gap down. Left elbow gap down. And now we're featuring lots of various trade managements live at 5:32 a.m. Pacific Standard Time. In an extreme period of worldwide banking turmoil. Let's just leave it at that, MMT. But these are the trade managements that we're going through and why we make money as a market maker. Now, when we get back to Chipotle, we look at getting net long. It closes at 294. We shorted this before the earnings, just as we did. Let us not forget the short that we got here on the Buffalo Wild Wings. Any movement up towards $75 or any upside price volatility and it stops somewhere around 72.5, you'd bam, $75 put. You'd hit it, and then it would reverse, and bam, the value would go higher, and you would get paid. Buffalo Wild Wings, it's another one short, and it's a left elbow gap down too. Now, Chipotle, we already shorted it. And once again, MMT, this is live, and we have about a little bit less than an hour. And we're going to go over all the pricing so that you're going to have all of these nice opportunities today that hook you serious coin based on the volatility price band, both the long side, the short side, and how they fail up at the upper end of that resistance called that all-time gap open up volatility to the higher resistance levels within the reversal of the trend price failure channel. But just remember, high frequency trading is exactly what it is. That means it's a program script. So you have to know how they're going to operate, and we do, and that's what we teach you. Not only that, is when these things are going to get the volatility and how price volatility increases. So we're going to be looking at this particular one. We're going to start looking at the $300 call because they've taken all the premium out. And we're going to find out today what the range is going to be relative to the close of 294.31 pennies. I'll see everyone in the live trading room. Once again, on 725 earnings. Once again, big gap downs. This is pre-market, how to trade pre-market, how to get that price action entry at that best. What? Wholesale capital risk. That means that your capital is always at the wholesale level. Therefore, it has less risk than anyone else. And you have a chance of coming out with a profit. One of the things that we really want to have, the last little piece of the key feature of this pre-market with the big, nice volatility gap coming out of two stocks out of the dirty 30 Dow, the NASDAQ futures. Well, last night There's pre-market live videos where even Google was down at 600. We thought we were going to really steal that today because Google is going to start to outperform off support levels much better than what Apple was doing. There's been a big change as of today. Today's the first day. MMT. And it is. And here it's live and now. We were looking at stealing these 605 calls, and then I got the 600s over here. And they're a weekly price action, wholesale entry, and exit. They got marked down good yesterday, look. But today, they make money. And I'm going to be giving out live limit orders at that time.